welcome to the Deep Dive. Today we're digging into something pretty significant happening over in the Bitcoin world. We're seeing a real surge in activity around those Bitcoin ETFs.
Yeah, definitely. And BlackRock's IBIT fund is really standing out. It just had its biggest inflow in, 2 weeks?
Exactly. Now, just quickly, for anyone maybe less familiar, a Bitcoin ETF, an exchange-traded fund, it's basically a way for, let's say, traditional investors to get exposure to Bitcoin, without needing to deal with wallets and keys and all that directly.
Right. It simplifies things, makes it accessible through a regular brokerage account.
So our mission today really is to understand this recent burst of activity. Why now? What's driving it? And what could it mean going forward? We're using a Cointelegraph article as our main guide here.
Okay, so let's dive in. The numbers themselves are pretty eye-opening. For BlackRock's IBIT, on May 21st, we saw, $530.6 million in net inflows, just in one day.
$500 million is quite something.
It is, and context is important here. That's the biggest single day since May 5th, which was also a huge day. Very similar number, actually, but maybe even more significant. IBIT hasn't actually seen any net outflows. Not a single day since way back on April 9th.
Wow. Okay, so that's over a month of consistent positive inflow. That signals some real staying power, doesn't it?
It really suggests sustained interest. It's not just a flash in the pan. There seems to be some, underlying conviction building.
Okay, so that $500 million inflow is big, but the Cointelegraph piece had this comparison that really made me pause. On that same day, May 21st, IBIT apparently bought up over 10 times the amount of Bitcoin that was actually mined globally.
Yeah, I saw that stat. It's pretty stark.
We're talking, about 4,931 Bitcoin flowing into IBIT, compared to maybe 450 Bitcoin being produced by miners.
Exactly. When you frame it like that, it just shows the immense buying pressure these ETFs can exert.
So what does that practically mean when one fund is absorbing so much of the new supply?
Well, think basic economics, right? Supply and demand. If you have these major players consistently buying significantly more Bitcoin than is being newly created, it naturally reduces the available supply on the open market. And all else being equal, less supply meeting steady or rising demand, well, that tends to put upward pressure on the price. It can contribute to scarcity.
Right. Okay. Makes sense. Simple dynamics, but on a massive scale.
Yeah.
Now, it wasn't just about the amount of Bitcoin IBIT bought. The article also highlighted trading volume. Apparently, May 21st was also IBIT's biggest trading volume day since way back in January.
Yeah, that's another key piece. The source for that, I think, was the Trader TX account. It's something market watchers are definitely noticing.
So what does that tell us? Big inflows and high trading volume happening together.
Well, it often points to a higher level of engagement and maybe stronger conviction. It's not just set it and forget it's money coming in. It suggests active participation. People are trading, maybe adding to positions, reacting to news or price moves. It signals, broader, more intense interest in that moment.
Got it. And this wasn't just a BlackRock story, was it? The article mentioned the whole picture.
No, definitely not. If you look at all 11 U.S. spot Bitcoin ETFs together, the total net inflow for that day, May 21st, was over $600 million. About $607 million.
So a really broad wave.
Exactly. And Fidelity's fund, FBTC, also had a really strong showing. It pulled in $23.5 million, which was its second best day ever for inflows.
Okay, so definitely a wider trend here, not just one popular fund.
Precisely. And that broadness is what's catching analysts' attention. You had Eric Balchunas from Bloomberg, the ETF analyst, describing it as a classic feeding frenzy.
Yeah, a feeding frenzy. Strong words.
Well, his take is that it's largely driven by Bitcoin's price action. The recent rally, rising prices attract attention, attract more capital, potentially push prices higher. It can become a bit of a feedback loop.
That makes sense. And Balchunas also made another connection, didn't he? He pointed out that the last time ETF trading volumes were this high was back in January.
Right, which coincided with Bitcoin's previous all-time high.
So he sees a pattern repeating. Potentially.
Seems like it. He even predicted that most of these Bitcoin ETFs could see their average daily inflows basically double.
Double. Wow. That suggests he expects this momentum to continue or even accelerate.
Yeah, and the price action itself certainly seems to be fueling that optimism. The article mentioned Bitcoin hitting a new all-time high, just over $110,000. I think it was around May 2nd. And then it kept climbing, nearly touching $111,900 on Coinbase early on May 22nd.
Right. So that upward trend is hard to ignore. It naturally makes investors feel more confident, maybe more willing to jump in through these ETFs.
Absolutely. It makes the narrative much more compelling for potential investors looking at these funds.
So switching gears slightly, what are some of the experts within the crypto space saying about all this? What's their take on the outlook?
Well, the Cointelegraph piece quoted Jeff May from BTSE. His view is that investors are really crowding into Bitcoin ETFs. He pointed to like $3.6 billion in net inflows just in May alone.
$3.6 billion in May. Okay, that's substantial.
Yeah. And he thinks this trend has legs. He suggested it could continue as long as companies keep tapping public markets for funding. And he added an interesting potential accelerant: possible interest rate cuts from the Federal Reserve down the line.
Okay, why would Fed rate cuts potentially boost Bitcoin ETF inflows? What's the connection there?
It's about relative attractiveness. When the Fed cuts rates, yields on safer, traditional investments like government bonds tend to fall. So for investors looking for higher potential returns, assets perceived as riskier, like Bitcoin, might look more appealing. Lower rates can push investors further out on the risk curve,
Right. The search for yield becomes more intense. Got it.
The article also brought in another perspective from Jupiter Zhang at Hashkey Capital.
What was his view?
He expects we might see more volatility, actually, especially once Bitcoin clears that $110,000 mark more decisively. He called it entering uncharted price discovery territory, which, often comes with bigger swings.
Uncharted territory. Makes sense. No historical resistance levels to look at up there.
Exactly. But Zhang also highlighted a different angle. He mentioned that the unstable geopolitical situation and shaky macroeconomics globally are actually leading some investors to look at Bitcoin differently, maybe more as a long-term store of value or a kind of hedge.
So not just speculation, but potentially seeking safety in Bitcoin amidst wider uncertainty.
That's the idea. It adds another layer to why people might be buying. It's not just about chasing the rally. For some, it might be a strategic allocation decision based on perceived global risks.
Okay, that's a really important dimension. It suggests a potentially stickier kind of demand, maybe.
Could be. It points toward some investors thinking about Bitcoin's role in a portfolio over the long haul, not just the next few weeks or months.
So let's try and wrap this up. What are the main takeaways here?
Well, first, clearly there's been a major surge in capital flowing into U.S. bought Bitcoin ETFs. Big numbers.
Yeah, led by BlackRock's IBIT, but it's broad-based across the market.
Right. And second, this seems tightly linked to Bitcoin's recent price rally and hitting new all-time highs. Price goes up, interest follows.
And it suggests pretty strong interest, maybe from institutions, but also likely wider investor groups using these easier access points.
Definitely. And third, that comparison point we discussed. The ETFs absorbing multiples of the daily mine supply. It really highlights the significant impact these funds are now having on the market's supply-demand balance.
It really does. That image of IBIT buying 10 times the mined amount in a day is powerful.
Absolutely. So this deep dive kind of leaves you, the listener, with something to chew on, right? As Bitcoin gets more tightly woven into traditional finance through products like these ETFs, how might that continue to influence its price, its adoption, its overall role in the financial system, especially, considering all the economic and geopolitical uncertainty floating around out there?
Yeah, definitely a key question. How does this deeper integration change the game long term? Something for all of us to keep thinking about.